Hello and welcome to another update video about oil. We take a look at the CFDs on Brent crude oil. Continues to follow here the correction in most likely a wave 2. Why is that the case? So again, just quick reminder, I believe we are now in this wave 2 correction in orange here. We've hit a few days ago, last week, we hit my larger support area to end this overall correction. But that doesn't mean it needs to be over yet. We really only touched the surface. The overall trend as indicated here in the white, on the roadmap in white here, the white wave count, the Elliott wave count is still pushing further down. There is currently no signal that the low is already in. We are pushing higher. That is not unexpected. We talked about that this wave 2, if it already was over here, which it could be, I didn't see any clear 3-wave structure here, so it could very well just be an A wave. We expected the wave B down. I told you in the previous video, if the wave B was in, it really ideally turns around now because we touched a 61.8% retracement. It did turn around. We even broke above the descending trend line, have a bullish engulfing candle on the daily chart. The daily candle has it closed. Well, that was that yesterday? Today, for some reason. Does it show it's, I don't know why it shows it's closed already. Doesn't matter. It did a bullish engulfing candle, so it shows further upside possible from here, and that indicates the wave C has started. That is the first signal that the C wave has started to the upside, and further confirmation will be obtained if we move above the wave A high. That is at basically $83. And if we now look at the target for the C wave, we're looking first of all at the 1-to-1 extension, that is a 1-to-1 ratio that is assuming that the wave C of 2, so the wave 2 is a 3-wave move. You would normally expect that the wave C has the same length as the A wave, and that would take us to the 1.618 Fib extension. That's the stretch target at $91.65, but the first likely target is here, the 86.50 level. That's the 1-to-1 ratio. What kind of, and if we compare that now to, or let's just add the extensions again. I'm just going to mark them here. They are the likely targets. So we've got the 1-to-1 ratio at 86.50 pretty much. Come on, just what's going on? It doesn't do the line. I don't know why. 1 second, we'll be back. I think my internet just lost connection. So there you go. Draw horizontal line. And then the 1.618 extension here at 91.60. And if we now compare that to the retracements, so we measure the Fibonacci retracements. We don't use the extension tool. We measure the retracements of the wave 1. Then let's see if we find any confluence there between any Fib retracements and extension levels. So targets, what was that for? Okay, that is the, take that one out. It's a resistance level. So, well, not really, they don't lie together, but you can argue that we've got two key resistances based on this. We've got one here between that 1-to-1 ratio and the 50% retracement. That would be the first larger resistance, Fib resistance. Also goes together with this previous swing high. And then the next one is basically here the stretch target. Oops. Resistance between the 61.8 retracement at $90 and the $91.60 level. So two resistance levels that only, I would say, if we get above them, we could consider here something bullish that the low is in. Until then, I would expect we are just in a C wave of a wave 2. So these are the two key resistance levels. I would expect at the latest up here that we turn around to the downside. It could, for example, be a fake out of the channel because we're in this larger channel. Especially as long as we are in the channel, my expectation is still further down, because the move down here was basically too short in proportion with the general wave count here to the downside. It's technically possible that we have reached the low here, but it's not my primary expectation. I would currently only give it like a 35% probability that the low is in. Here short term now upside, absolutely anticipated. And then we would be looking at a wave 3 down in the next step, maybe into the $60 range, then a wave 4 up and a wave 5 down. And then somewhere down here, we can't really specify that very closely yet. yeah, we will most likely end here the bear market, but that can still take weeks or months. I mean, take a look at how long this took. This whole sideways range from when we entered the channel, that was back in June. 6 months later, we've reached it, maybe another 3 months, and then maybe we finally see the light at the end of the tunnel. But until then, further downside anticipated. Anything else to add? I don't think so. So my view is now that we will go up very short term in this C wave. That is my view until we break back below the B wave low. So if we now suddenly come back for whatever reason, break below $78.30, then I think we are already heading down in wave 3. On the other hand, a move above the wave A high at $83 would confirm even further that we're in the wave C. Okay. All right, and that's my update about oil. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.